What's up guys, it's Chris here. Now, property is one of the biggest sources of wealth across the world, accounting for more millionaires than any other asset class. But at the same time, while the price of property has been rising, it also becomes more difficult to buy an investment property because the average household income has been growing at a much slower pace. So one of the most important asset classes, and historically one of the top ways to generate a monthly passive income, is becoming further out of reach. Then there is the capital upfront for a deposit, the risk of mortgage payments, and the possibility of a bad tenant that doesn't pay and trashes your property. So for the everyday investor, it's not that easy to get a monthly rental income until now. So in today's video, I'm going to take you through 3 real estate companies on the stock exchange that allow you to invest directly into property with no mortgages, no deposits, and best of all, these 3 companies pay their dividends to you every single month. So by investing in one or all of these, you can build yourself a property portfolio while also building a monthly passive second income, just like monthly rental from an investment property. I love these types of videos, so let's get started. Let me start off by showing you a graph. This is data from the Federal Reserve, and it shows the difference between the median household income in green and the median sales price of a house in the US in blue. And you will see the same thing for pretty much any country in the world right now, which is a widening gap between how much we earn and how much a house costs. And typically the most common investment property would be a residential home or apartment, so it means that for each of us, buying a home is becoming more difficult, but also that buying a second investment property is even more of a stretch. But even if you buy an investment property, you then have a mortgage or a second mortgage to pay. You have to worry about finding tenants and if they're going to pay you or damage the property, or about repairs and evictions and many other things. There is just a lot of admin and risk when you invest in physical property. And don't get me wrong, it's a great way to invest and can be very profitable. It's just not always possible or preferable for everyone. So today we'll go through 3 property companies on the stock exchange that you can invest in right from your couch, that have huge amounts of properties for diversification, that manage the tenants and the repairs and the mortgages and all of that for you, so you can sit back and receive dividends that are paid to you every single month, just like a rental income would be. We'll go through the company, its share performance, and exactly how much dividend it pays every single month, so you can easily build your property portfolio and build yourself a monthly second income. Alright, so let's get straight into monthly dividend company number 1, which is EPR Properties. Now, EPR, originally Entertainment Properties Trust, is exactly as the name suggests, a real estate investment trust based in Kansas that invests in properties such as amusement parks, movie theaters, gaming properties, fitness, ski resorts, zoos, museums, schools, and hotels. They were founded in 1997, and after 27 years they now have over 350 properties all across the United States and Canada. Simply put, they invest in properties that sell experiences. And one of the benefits is that you are less exposed to the risk of property like shopping centers, where online shopping is taking over, or office buildings where working from home is becoming more prevalent and businesses are needing less space. According to EPR, 74% of Americans prioritize experiences over products, and as the population and overall wealth of America grows, it seems like a stable area of property. But let's look at the share performance. Now, when we look at higher dividend shares, we need to look at something called total return, which is the overall return an investment produces, including share price growth as well as dividends. Because while share price is an indicator, when a share is paying, for example, 7% a year over 27 years, that adds up to a lot. So when we look at the share price growth since it listed, it shows as 143%. But if you include the dividends, the total return is 1,332%. Because it's a physical experiences property company, I really wish I invested in them during COVID, as that would have been great value. But even now, the share price hasn't returned to that pre-COVID point, and Simply Wall Street estimates it's currently trading at 60% below its fair value, and that there's probably a lot more room for growth in the time to come, especially as we hope for interest rates to come down in the next years. So currently EPR is paying a dividend of 7.2% a year, which in general and especially in the US market is really good. And as you can see, they pay their dividends pretty reliably every single month. Now, in terms of the future for this stock, obviously we don't have a crystal ball, but it seems to me that after COVID, it has slowly and steadily been gaining in its share price, and I think in anticipation of interest rate cuts has gone up 7.3% in the last month. This is honestly one that I would consider for my own portfolio. And speaking of my portfolio, on Friday I posted a breakdown and explanation of EPR on the Casual Cash Club as a stock I was considering to buy for myself. This community on Patreon is where I share all of my personal stock purchases and sales and regular portfolio updates showing all of the profits and losses for every single stock that I own, including the dividend income that I receive each month. There's also spreadsheets to track your own investments, 2 free ebooks, and market updates with my own views on what is happening with stocks and markets around the world. But the best part is that we have a 7-day free trial for all new members, so you can view everything I just mentioned for free and see if you want to join our roughly 100 members. So you can click on the link in the description to claim your 7 free days, and I'll see you there. Next on the list, we have Stag Industrial. Again, as the name suggests, this is a real estate investment trust that focuses on investing and operating industrial properties throughout the US. They currently own more than 570 buildings at a value of over $9.5 billion. And typically, the type of properties they invest in are single-tenanted industrial properties like your factories, warehouses, distribution centers, and things like that. Once again, these types of properties are usually less afflicted by some of the changes that we are seeing in the offices and shopping centers. So they listed on the New York Stock Exchange in 2011 and honestly have had a pretty steady run of share price growth since then, showing a share price gain of 225% since then, and in my opinion a beautiful graph of steady gains with around 372% total return over the 13 years. Now let's chat a bit about Stag and its performance. Over the last 5 years it is up by 37% in share price, and just in the last year it is up by about 10%. So once again, some decent steady gains. Then in terms of dividends, it's currently paying about 3.7%, and again it pays you every single month. But to be honest with you, although it's steady, it's nothing too mind-blowing either. With roughly 7% share price and 3.7% dividends, you're looking at roughly 10% or so total return a year over 5 years, or a better 28% average return since it listed, which takes compounding into consideration. So overall, you're getting a much better return than a savings account, but personally I think there are better options I would rather put my money into, and one of those is the third and final company on our list of monthly paying stocks. So the last on our list is Realty Income. Now, if you follow the channel, which by the way, if you haven't already, please like the video and subscribe to the channel. This is a company I did a full review on, and if you are on the Casual Cash Club, you will know that I have been buying this company all throughout 2024 and have built up a holding so far of around $1,100. It's currently sitting in a profit of about 22% and has paid about $40 in total of a monthly income while I've been slowly building it up. So I guess the question is not whether I like Realty Income, but why I like Realty Income. Well, Realty Income is a real estate investment trust in the US that invests in over 15,400 freestanding single-tenant commercial properties in the US, Spain, and the UK. And these are triple net leases, which simply means that tenants pay for almost every expense of the property themselves and then pay their rental to Realty Income. Now, this is important because it means there is less risk for Realty Income. Many of these companies will sign around 30-year leases and will often be big companies who lease their offices or storage from Realty. So a 30-year lease is very low risk, and the fact that Realty doesn't have to cover other costs like rates and taxes, electricity, water, etc. also means it's low risk. So they will have an agreed lease escalation for the 30 years and very little fluctuation. And that brings me to my favorite aspect of the stock, which is this. Their maxed out share price graph. And as you can see, it's a very stable and very well performing share price. Again, there are no crystal balls, but you can see how it's hard to imagine how this share price would not be higher over any 5-year period based on its steady long-term growth. And second, equally impressive aspect is its dividend payment. As of this month, they will have paid their 650th consecutive monthly dividend without missing any, including during market crashes and global pandemics. And on top of that, they have also increased their dividend every single year since they listed in 1994. Now, we often talk about steady long-term growth dividend stocks on the channel, and few companies fit the description as well as Realty Income. So they pay a dividend of 5% a year, and Simply Wall Street are also saying the stock is trading at 43% below its fair value, which we see a lot for property stocks in times of higher interest rates. And as you know, I like this stock, I own this stock, I've made a good profit so far, and I'm going to continue to dollar cost average and buy into realty over time. Okay, so a final wrap up of our 3 monthly paying property stocks. We have EPR with good potential share price growth, a dividend of 7.2% and apparently 60% undervalued. Then we have Stag Industrial with okay share price growth, a dividend of 3.7% and apparently 45% undervalued. And lastly, we have Realty Income with very good long-term share price growth, 5% dividend income, and apparently 43% undervalued. Now, before buying any of these, make sure to do your own research and make sure you're considering if these are right for you, your risk profile, and your portfolio. But personally, I think Stag is a little bit underwhelming, but that EPR and Realty Income are good monthly dividend payers with some long-term potential and something I would be happy to have in my portfolio. And guys, that is it for today's video. I hope you enjoyed getting a breakdown of 3 monthly dividend paying property stocks and how you can use them to build a monthly second income, just like a rental payment. And if you want to see more videos like this, please subscribe to the channel and like the video, and go claim your 7-day free trial for the Casual Cash Club in the description to see my stock purchases and portfolio updates. But until then, I'll see you guys next time, as always, on Casual Cash. Cheers.